So, so I know the arrangement is a bit awkward, so I'll be sort of going back and forth. So first of all, thank you to each and every one of you for coming, right? It's a sincere pleasure, right? For you, each and every one of you taking time from I know you're busy, this is the holiday season, your families, and we keep trying to yank you out towards the end of the year, every single year, right? So we don't take that for granted. So on behalf of myself, my wife, Onome, we appreciate you all coming here today, okay? So there's some of you that this is your first time vibing with us, and we try to do this the last Saturday of the year. That's sort of our cadence we try to keep up with, right? So I will just quickly run through what the plan is, right? There's nothing formal, right? If you all that know us, we don't like formality, right? I mean, we've worked hard all year, so this is just a time to just chill, relax, and go through stuff and network and have fun, all right? So I will kick it off first and just talk for a couple of minutes. And then we like to just spend about 10 minutes to quickly go through the performance of each of our deals, right? And we like to go in chronological order. So starting with our very first deal, and then one of my co-GPs, general partners, will come up, walk you all through it. You have on your tables, your QR codes. So if you scan it, you'll be able to access some of the materials. And so we know that some of you that maybe are, invested in few deals, but the way we do it, we all have access to everything. So, and it's good because it provides broader perspective for everybody, okay? So just to kick it off, right? So, sorry, you're at the back, you might not really be able to see what I have here. But what I wanted to just share is we started this journey back in 2022, all right? Our very first deal, Monterrey Vista, we closed on that June 29, 2022. And to date, we have closed 6 deals. From an equity perspective, we've raised just a little bit over $8.5 million from each and every one of us here. And that is remarkable. And the point is, when we did that first deal, it was a turning point. Because, of course, the majority of our investors are Nigerians. And you all know we are plagued by this disease where we don't really come together to do good, especially when it comes to money, right? So when we did that first deal, there were about 17 of us. 16 of us were Nigerians, and we only had one honorary Nigerian. Sergio. Right? Yeah. What's his Nigerian name? Yeah, Adewale. Right? So, him and Leslie were, jumped on board. And they came in literally like about 2-3 weeks to closing. That's when they jumped on board. Right? And so it's a huge testament to them as individuals. And we love them for that. And then they've been with us, throughout. All right? So, and there's something Sergio always says. It's like, you mix Nigerian and Colombian, that's not a good recipe. Right? Because we have the same traits, right? But we've proved people wrong. But anyway, so we've raised $8.5 million. A little bit over 30% of that was raised by myself and my co-GPs, and 70% from the rest of our other investors. But the main point here is almost 80% of all of our investors have at least invested in at least 2 deals. Right? And we've not gone full cycle on any of our deals. So that is one of the biggest feedback to us and makes us humble, and he gives us that directive that, okay, what we have put together as a community makes sense and it works. All right? So that's basically the landscape of it, right? So we have some very exciting news to share, right, on some of our deals. Of course, we've had challenges, no doubt. But I think every challenge we've faced, we've always had a solution to address it, all right? So, and that's the beauty of it. So now I will hand it over to Amara, right? So like I said, we're just going to spend 10 minutes per deal. And I'll get one of my co-GPs to sort of walk you all through. So like I said, you can scan the QR codes on your table, select the deal, and you can sort of follow through. But the whole point here is not really meant to be a detailed analysis or whatever. No. All right? We're just giving you like a state of affairs of what transpired 2025, and potentially I'll wrap up on our outlook for 2026. All right. So on Monterrey Vista, we had 3 co-GPs, myself, Amara, and Sergio. So I'll hand it over to Amara to sort of walk you all through. All right.
All right. Thank you, Efe. I hope you all can hear me. Thank you all for joining us again this year. I feel like a proud mom. Just looking at this room and all the people that are here. I see old friends that I haven't seen in a while over there, and I see new friends and new faces. So we continue to grow, and it's just amazing. Chief Sergio here trusted Efe and myself when the first deal was done. I remember, and I think I've told this story before, when Efe called me and said, I have this dream, this is something I want to do. And I was like, Efe, I know you don't smoke, you don't drink, and at least excessively, for you to think that this is going to work. Nigerians will not give you their money. But you know what? Once we started making those calls and started talking to people and trying to explain to them what we're doing and what the dream was here, the traction was unbelievable. I mean, that gave us so much hope and just made it really exciting. I think even the financial partners were really excited to see this happen because they'd never seen Nigerians come together to do something like this. And they were like, wow, this is amazing. And it just took off since then. So really excited, very thankful to Efe for taking us all on this great journey. And thankful to each and every one of you for trusting the process. So I'm going to walk you all through Monterrey and what has happened this year. I think Efe has done a fantastic job sharing, routinely what's going on, good, bad, ugly, everything. I think some of us see his video and we're like, enough, we're good. We know you're not going to chop our money, we're good. But it's really great how he keeps us honest and really keeps everything very transparent. So, are you going to show the slides? No. Okay, no slides. Okay. So I'll talk through what I have here. So Monterrey has gone through, obviously, a few challenges this year. I think one of the key things was we didn't do any payouts. And I think if you've been keeping track of the financials, there were some challenges with occupancy and issues with rent, with some of the tenants and all of that. But this is, to be expected. The first 2 years was really great. This year wasn't obviously the best year for this deal. But I'm glad to say that in Q4, things picked up. Occupancy is at 100% this year, this quarter. Lease renewals are a great opportunity for us to increase rent. And so we're able to increase rent about 3% based on that. And if you look at the rent increase from when we started in 2022 to now, it's about $340, which is great per unit. So overall, I think operationally, this deal is doing great given the challenges that it had this year. When it comes to expenses, Efe has done a great job with the admin and marketing and property management to keep our expenses really low, commensurate with the issues we had with revenue. So this year, total income reached approximately $400,000. NOI is about $243,000. After expenses, about $156,000. I mean, the great thing, if you're looking at the slides, is to look at the DSCR ratio, and you can see that given the issue we had in Q2 and Q3, we're still able to stay above board, and that's our ability to pay our debts, pay our loans and all of that. So given what has happened this year, we're still good on that, so that's really good to see. When it comes to the key highlights here, one key thing to see is that we're up and going. So Q4, we're 100% occupancy. So hopefully coming next quarter, we should be able to pay out some dividend going forward. And I did mention the issue we had with bad debt, and also we had a significant damage in one of the units. That was not planned, so that cost quite a bit just to make repairs because that was an unplanned cost that we had. So total distribution to date is about $44,000. There have been no manager contributions to date, and that aligns with our incentives, right, which we've always promised this team from day one, to kind of focus on long-term investor value going forward. So bottom line, the asset is stable. Ife is going to talk about the refi that is going to happen soon on this asset, and the goal is to return about 25% of what you've invested to you, or maybe even more than that, depending on how it goes. But the fact that we're able to do this with added value to the property is great. That shows that we're adding value, and that's what we promised from day one. So the focus on renovations and expense control, and obviously keeping our occupancy high, has increased the property value long term. And hopefully this refi goes forward and you guys see a little bit more of your money and the economy bounces back, and we can hopefully sell or do, pay you all back your money and get you to invest in something else. But that's all I had for Monterrey. Well, thank you all.
So across all of across our portfolios, right? So our very first three properties are now stabilized. So by stabilized, what do I mean? It means that we have completed the bulk of all of our planned capital renovations or projects, and we have achieved our targeted or exceeded our targeted rent premiums, and we've achieved at least at the minimum over 90% occupancy for a certain period of time. So the first three deals were at that point. The other two deals we are in progress of getting there, and our last deal that we'll talk on that we just closed on last month, that is just in the kickoff phase. So the very first three deals, like Amara mentioned, we're in the process of refinancing our debts on those deals, right? Given the potential outlook for next year and 2027, we've built a lot of value in these assets. So we will close potentially, knock on wood, on the refi January 16th. That's the target date. And we anticipate that we should be returning anywhere between 25% to 45%, depending on the assets, of the original capital that you all invested. We should be returning that back. And from a tax perspective, I mean, that's a tax-free event, right? Because those are proceeds from debt, right? So that's how you play this value-add game. You do all that work, you cash flow a little bit while you're doing it, you build the value, you realize that value either through a cash out refi or you sell the property. All right, so that's what we have coming up. So anyway, so switching to Esperanza. So the GPs on that, myself, Sergio, and Akin. Akin is not here today. So Sergio has the pleasure of walking us through what happened at Esperanza.
Thank you, Efe. And first of all, I would like to thank you all for being here, celebrating another year of this investing group. It's been, since 2022, so it's been about a couple years now, 3 years now. I'm going to be presenting the Esperanza Burnham apartment complex, which is a 36-unit apartment complex in Spring, Texas. So most of you guys know me, but whoever doesn't know me, I'm going to introduce myself. I'm Sergio Jerez, one of the general partners, also known as Adewale, and the honorary Nigerian, right? Going back to the property, Esperanza also had a couple of challenges this year. Some of them, one of them actually, a couple months ago, we had some domestic violence in one of the apartments and resulted in a deceased person, and that didn't help attracting tenants and things like that. Another one, we had a person that filed a claim on us. I think she knows the system. I think she knew what to do and play the system, and we ended up having a settlement with her. And that insurance claim actually brought our insurance premiums up by 17%. So that's 17%. That's correct, right? And also, I guess these immigration regulations now are not helping either, right? I hope ICE doesn't show up here today because we're gonna be the exit door is on this side. Anyways, other than that, because aside from the challenges, actually FA has done a great job trying to keep this property up. We have actually increased the tenancy occupancy, which is the highest that we've had, 97%. I believe. We've also increased the leases, the rent by 3%, and we have moved everybody out that didn't pay rent. All the evictions are all the people that got evicted are out of the apartment complex, and because of the synergy that we have with other properties, we have also been able to keep expenses below the 50% mark at right now 45% of the net operating income, I believe. Well, I forgot I was gonna say. I wasn't gonna take long, but I think I'm taking too long. We're just gonna keep it short here. So this year we had a net income of almost $600,000 with operating expenses a little below half, so at $264,000. With an NOI of $327,000. So also, even though we've had all these challenges, we've been able to keep the debt to service coverage ratio above the 1. We are at 1.5 actually. So we haven't had to actually inject money into this property this year. So the property is actually maintaining itself. We had to put some money in last year for property taxes. So 2 years ago, us managers had to inject some money into it. So the property this year is actually doing pretty good in that sense. So based on the leases that we've, all the increase in rents, we've actually generated a value on paper of 7.9 times what we have invested. So hopefully the market will get better in the next couple of years and we're able to actually monetize that investment. But one good thing is we're gonna refinance and hopefully we're gonna be able to take, how much is it, 25?
Esperanza probably close to 35, 40.
40% of what we have invested into the property. So at least we're gonna see some money back. Okay? That's all I have. If you have any questions, just let me know. I know we're all hungry, so I wanna go quick. And all right.
So there's one thing that, let me just add on to something Sergio said, like at Esperanza, right? So for all of our deals, generally, there's one thing that is unique to how our deals are set up is the fact that in our operating agreements, in all of our agreements, we as general partners cannot make capital calls. So it is very, very intentional. So what does that mean? So take, for example, like in Esperanza, the past 2 years, because of the main challenge we had was our property taxes went from $60,000 to $125,000. There's no way you underwrite for that increase. And that's just that whole spring area that got hit. So we didn't have enough cash flow to support that increase. So if on a general, the way these deals are set up, us as managers would have come to the investors and say, hey, we have this shortfall, we need to infuse fresh capital. So if, for example, you had 5% equity interest and we wanted to infuse maybe $100,000, you are obligated to bring 5% of that $100,000. So we'll make a capital call. But in all of our deals, we intentionally put there that we cannot make capital calls. That if there's any issue, us, the managers, we are responsible for that infusion of the additional capital. However, even when we infuse that capital, we must do it in such a way that we cannot dilute the original equity interest of our investors. So we preserve our investors' equity positions. So on Esperanza, when we infused the capital, we basically diluted our own equity positions, right? Not our investors. So if, for example, you had 10% equity interest, we put in new capital, your 10% still stays 10%. But if we had X percent, it got diluted downwards. So all of our deals are set up that way, and traditionally, that's not how syndications are set up. Right? So I remember when we were formulating this, my CPA, my attorney, sat me down. I had to sign waiver to make sure I knew what the heck I was talking about. Right? They were covering their own backside, right? But anyway, so I just wanted to add that. So Lakewood, so I'll hand it over to Uche. On Lakewood is myself, Sergio, and Uche. So Uche will run us through Lakewood.
Good evening, everyone. Like he said, my name is Uche. I am one of the partners for Lakewood West, and I got to meet Efe through a very mutual friend of ours, Toby. So I've known him for a few years now, and he's been an excellent ally and partner, as most of you can attest to as well. So I've had the privilege of investing in all the two previous investments, the Monterrey and Esperanza, and it's something I've had an itch for a very long time, and FA came at the right time. So I kept bugging him, and I said, hey, if an opportunity came up for a spot for a partner, I'd like to get on that journey and experience that with you. So if I had known that the capital call thing was an obligation I had to carry, maybe I would have reconsidered it at the time. But I mean, it's also like it's something we're all experiencing newly, and it was very important that the investors didn't have to be at the bottom. So Lakewood came as an opportunity, and I jumped on it. And I'd say it's been FA has made the whole ride very stress-free, in a way, because we are all professionals in our own rights, and we do the things that we do. But he's always out there grinding, and with the videos, his social media skills have gone up significantly. He's improved a lot. He's not stammering anymore on his videos, and he's able to turn it around very quickly. So he's picked up a lot of good skills. Anyways, so Lakewood is we acquired Lakewood late 2023. So it's about 2 years now, about in December, 2 years anniversary. And it's been a very fun ride. So I'll just walk us through some of the numbers. As far as the highlights go, we've had very, very high occupancy. Q3 we had 100%. In Q4 we are about 97% or thereabouts. So that's really high, even in this current market. We've had great lease renewals. We've had low delinquency. So one of the things that you get to see with multifamily investments is that people take advantage of you if you let them. So you're going to have people who know how to work the system. They will, take them to court. They know it takes a few months, and if they appeal, it extends that by another few months. And at the end of the day, the chances that you get anything back from them is almost nothing. And then they hop to another apartment, and they do that, and it's just a lifestyle that they have. But with Lakewood, we've been very fortunate that we've had very low occurrences of this situation. We've also been able to reduce operating expenses to sub 45%. So again, industry standard is anything under 50%. So we're doing very good in that regard. There were challenges, of course, like any business that you run. One of the main ones there was the property has a pool in it, and we worked hard to renovate the pool in the summer so that people can enjoy it. But we ran into issues with the city where the inspector was just being a pain in the backside. And as a result of a lot of back and forth, we were not able to open the pool in summer, but eventually we were able to sort that out and resolve it. So the pool is fully open now and it's fully functional. So hopefully, knock on wood, come summer next year, the tenants will be able to enjoy that facility. Another thing that we experienced was we had a major lightning event that struck one of the trees. Yes, we had to cut that down, but the good thing about that is that we didn't have any issues with the property itself. The lightning struck one of the big trees out in front, and we had to spend money to cut it down, make it safe for the occupants, and make sure there's no issue that arose from that. We had, going into the part of the underwriting was to, the plan we had was to replace all the windows, right? So we had to put a stop to that. We've had some challenges with being able to replace all the windows, so we will pick that up maybe next year as we progress. As far as numbers go, I will say that one other thing I want to call out. Income in 2024 was about 424,000. Right now it's 520 thereabouts, so that's almost, my math is right, about 20%, 18, 19, 20% year on year. Then net operating income is 291. Last year, 2024, it was 211, I think. So that's almost $80-something thousand in value, net operating income that we've been able to add. And if you look at the DSCR, it's almost 2.0, right? And what we wrote for was about 125, if I'm not mistaken. So we're doing very great there. And again, we've not had to inject capital into the business for the past 2 years. And knock on wood, we don't have to do that. Expense ratio is below 50%, like I mentioned earlier, and occupancy is trending very high. So with all this stuff, or the other things that I've shared, we've been able to add almost $3 million in value for the property, right? So again, if we were to sell today at the right terms, that's likely what we'll be able to recoup from the investment, from the business. Okay. What else? So as far as capital projects go, we are 100%. So everything we intended to do when we acquired the property, we've been able to achieve as far as capital projects. So we've completed at 100%. We have about 97% exterior improvement that we've done, and there's just a little bit more work left around repairs and fixes. So these are all going business as usual, operational issues that we have to deal with. So if you look at some of the charts here, you see how we're doing as far as cash flow. In Q4, we are at almost $40,000 in cash flow, which is almost like a 25% increase from Q3. So these are all very good, healthy numbers, and we plan for things to continue to trend in the right direction. What else should I bore you with? Because you guys are seeing what I'm seeing, you know. So, but ultimately, I would say Lakewood has been. So Lakewood was the middle child of the portfolio up until a few weeks ago when Jacquelyn was acquired. So there are 6 in the group now, in the portfolio now. So one of the things Sergio mentioned is, you know, the more you do something, the more experience you have, the more you leverage your experience, your knowledge, and you increase your operational efficiencies. You know, one thing I would want to call out, I'd like to call out is the team that the FA has. Not just in the investors and the GPs, but the operational teams of boots on ground that he has with his property managers, which is the same across all the properties, which makes it so much easier. You're having one conversation, you're not context switching all the time. You're interacting with the same people, and it makes it so much easier to engage. You know, the lawyers, the accountants are all the same. So this is something that having a good team on ground makes it so much easy to run a business efficiently, and that is something he's done very well, put together a solid team. So I want us to put our hands together for FA for doing a stellar job. Now hand it over to you.
You know, so Mangum GP-wise with myself, Sergio, and Toby, right? So Toby will run us through. So bless you. So Mangum is just about 1 year old. We acquired it a week before Thanksgiving last year, and that Mangum was a little bit. We deviated a little bit in our buy box, because when we bought Mangum was just about 45% occupied. Because usually we only buy assets, it must be at least 90% and above. But Mangum was the first deviation, and the reason we did that was it was owned by a non-profit, and they had a new CFO, and she was letting go of underperforming assets, right? So, and they had housing folks in there, so already knew that part of the repositioning of the property we needed to get rid of everybody, pretty much, and bring new sets of people in. So, so since they had already done the job for us, meaning that over 50% of the property was already vacant. So it made our lives a lot easier, and we felt that we had proved our processes, our methodology, and how we renovated and how we operated. We're very comfortable that we could execute, right, within that time frame. So, and it's a very awesome story, that Toby will sort of walk us through that, what we've done in 1 year to reposition the property, right?
Yeah. Evening, everyone. Thank you all for being here. I'm Toby. I've one of the GPs on Mangum Properties, as Ife mentioned. I think he's been kind of kind to Mangum. Mangum was it was quite a very unique property for us, because it was the first time that we kind of had stricter terms from the banks. The banks had seen what we were doing. They knew that we were able to execute. So we had tighter schedules, tighter terms. And so it required a need for, not to be cliche here, a need for speed. Like, we needed to do what we were doing well and do it fast. And everyone who knows what's going on with just managing all this type of properties, you don't want to make mistakes. We don't want to make any errors. So it required a lot of intentionality, a lot of focus from us. If it's mentioned it, we were hit with a very different profile of tenants that they came with certain personalities that we had to acclimatize ourselves with, right? But that was also helpful, because it also helped us to focus on our plan, make sure that we were reinventing it. And I want to focus on that, because that would have been probably a major headwind in the property, because it created just longer eviction processes. I mean, we had people that were no-shows. We had to get authorities involved. It just required a different skill set that we had to brush upon. So Mangum, love it, but we had to do all those fast. But if you guys are looking at the deck, we've seen our wins. I will always emphasize that we had to move quick, was one of the biggest ones here. But if you will all join me on page 2, it will show you that we were moving things along, and because we hit a little bit of a wall with the long eviction processes, you can see that our first 2 quarters of the year was tough. We couldn't really move things as fast as we wanted it to. But the minute that we got things, right-sided and we were ready to go, we were able to you would just see that peak in our Q3 where things just accelerated for us. And that was good feedback for us, that we had a good plan in place. We had a good strategy going. We knew what we were doing, but we just needed to clear these blockers out of our way. So yeah, you can see we might not have hit some of our income targets and our expense targets as planned, but we were still frugal, and our operational efficiencies were still low. So that NOI, which is one of our big metrics as investors that we measure, was still on the up and up. So we were quite excited to see that. Everyone's come up here and talked about the DSCR, the debt servicing ratio here, and they've been, kind of like happy about it. I'm ecstatic about it, because, like I said, we had stricter terms, and the banks were looking at that. The banks were looking to see how efficient, how profitable, how well we were running this business. And it was almost like the terms that they gave us, they were really, really squeezing it to see, just to make us sweat a little bit. So being able to hit it and, surpass it to where we're now at a 2 that's amazing. As of this Q4, we have taken that number way out. And I can't wait to show that to our bank representatives that, look, we're still good for it, right? We're still good for the work. So I won't dig into all the deck, but we've finished all our capital, most of our capital projects. Exterior renovations are done. Tenants are happy. They love what they see. We have a few units that are still waiting for renovations, and we're really just timing that with when we'll put them, on market or get them occupied. But that's still strategic at the point. But we're 95% there, so that's really a good one for us. And yes, back to the need for speed. Once we rolled out all the tenant profiles that we didn't want on location, and we started bringing what we believe were the occupants of Mangum, we were able to hit our 100% occupancy as of Q4. So Mangum has really picked up. For us, it's just a sign to say, you're doing the right things, despite all the headwinds you faced. Keep at it, and we can only see the exponential growth in all of that. So the deck is there for you to review. We're way above our base rate or even our planned rent that we initially thought we needed there. And so we're surpassing in that area too. But we're excited. We're excited to see what Mangum will continue to do in year 2. So thank you all for your support, and I'll bring it back up. All right.
Now, apologies. I know maybe at the back, sorry, we don't have a mic. I know for me, I speak loud, but it might have been hard for some of you to hear. So apologies for that. So let's switch over to Johanna, right? So we closed on Johanna June of this year. So Johanna was a little bit of a deviation, right? So, I decided to give Sergio and Leslie a break, right? A little bit of a breather. And so on Johanna, it's just myself, Tati, and Carlos as the co-GPs, right? So Tati will be... No, I'm gonna talk about Johanna, right? But one thing I want to share, right? You all would have probably noticed the way I've been very, very strategic, right? The way I'm set up, my co-GPs have always been an investor on prior deals, right? And that's very, very intentional, right? Because it's almost, they get in, they trust the process, but also makes them more comfortable, because when you swing over to the other side, you are taking on more risk. So when you come in on the passive side, you get a better perspective, and then you might feel comfortable. Then if it's for you to take on that extra risk, and then that decision is made, and then we have that conversation, right? So like for Toby, Uche, even before they got in on those deals, we have been having a conversation years prior, right? So that's sort of how I've set it up that way to, in a way, expand that opportunity across all of us, right? So Johanna was it's a lovely deal, 48 unit assets in Spring Branch. We bought that for, I think, about 2.5 million, thereabout. Fantastic basis. It was owned by a very big time commercial real estate investor in Houston. That so he had owned the property for over 30 years, right? And he passed away last year, and handed all his portfolio to his wife. And his wife, on the older side, she didn't care about real estate. She didn't, so she was just offloading the entire portfolio. So, they brought it to us off market initially. And so we're able to buy it very, very aggressively, get very good basis going in. It's a 70 vintage. So in not 1 year, just under 6 months, right? Because we knew going into Johanna was going to require a lot of work, right? Because, if you have someone has owned an asset for 3 decades, right? And the rents were nowhere close to market. So when you have that kind of setup, your business strategy is totally different. All you want to do in that case is you want to have low rents so you can have maximum occupancy. You're not fixing any repairs, any issues. You don't care about that. You just want full property and you're getting that cash. So we knew there was a huge upside, but it came with a lot of work. So the kind of work we did in just 5 months, we have matured over the years. So what do I mean? So take, for example, part of my screening criteria for properties. Maybe about a year and a half ago, if it was going to require new roofs, I wouldn't touch it. Right? If it was going to require swapping out the electrical systems, I wouldn't touch it. Right? But strategically, as we've matured, the team has expanded. The experience we've gained more experience. So slowly we start eating on more items that we feel comfortable with, right? So like in Johanna, just within the first month, we had already changed the roofs, new roofs. We swapped out the electrical panels. We've renovated some of the units. But I think one of the biggest highlights for us is the conversion of the leasing office into a unit. Because for decades, the leasing office was actually a down unit, right? So instead of 48, they actually only had 47 units. So what we did was we took one of the storage closets, we modeled that into the leasing office, and then we took the old leasing office and built that back into a livable unit, and then rented that back out to the market. So just by adding that unit back online, and I think, if you understand the numbers, adding that unit back online, we've basically added at about $280,000 to $300,000 of value to the property. Just that move. And the capex we spent in doing that was about 10, 15 grand. Right, so you don't get these sort of extreme wins all the time, but that's a good definition of value add, right? Where you are strategically adding value to an existing asset. Our rent premiums, just like what we do in all of our deals, when we underwrite our deals, we know what we can actually get, but that's not always what we base everything off of, right? So like when we analyzed Johanna, right, we're targeting that, look, we can get like maybe 1,100 on the two beds, maybe like 1,050. But in reality, our renovated units are 2 beds, we are getting about 1,550 on them. And the big thing with Johanna as well is one half of the property, it was all bills paid. So can you imagine in Spring Branch in Houston, you're paying for a 2-bedroom, almost 1,000 square feet, you're paying about $800, $900, all bills paid. In Houston, in Spring Branch, fantastic neighborhood, right? So we've not just gone up on the rents, but also now we're reverting back all the utilities back to the tenants to pay for their own utilities, water, electricity, gas. So that's also a shave off on the expenses. So in a short time span in Johanna, I think the summary is with a lot of our assumptions going in, we've not just validated them, but we've exceeded them, right, from a rent perspective, so which is great. Because when you do all this value add, right, the very first unit you try to lease up after you've renovated it, that's your biggest test. Because if you base your deal on, the rents before, let's say $600, and you've based your analysis that you can get $1,000, but now the market tells you that, you can't get $1,000, and then you have to get maybe $800, that changes everything. So that very first unit we're able to lease up, and we actually exceeded our target by a couple of hundreds of dollars. Was phenomenal, right? And then as of today, anyway, we've completed about 70% of all of our exterior projects, and out of the 48 units, we've renovated, I think, a little bit over 27 or 30% to date, just within 5 months, right? So the speed of our execution, I think, has increased deal by deal. And that just comes with experience, right? And of course, and it gets a lot better. All right, so Johanna, we're very excited. We're looking forward to, God willing, come this time next year, the story we'll be telling on Johanna. And one thing to add, Johanna is, I think about 60% of our investors on Johanna were first-time investors. Right, because it was a small equity raise. We raised, I think, just about $1.3 million. So we've had a lot of people that have not been able to get in on our deals. So on Johanna, we didn't really release it out to everybody. So we just went in a targeted fashion to ensure that we could accommodate a lot of people that have not been able to get in our deals. So I think close to 60% of our investors were first-time investors, and that's made us extremely proud. And the reason is, I mean, all of you here, right, and those that are not even here as well, the power has been with all of you. Because, I mean, I think majority of you, you invested initially, you always brought someone else within your circle, within your network. Because for me personally, that's how I'm wired. If I've done something that I like, and then I must share it with everybody. Now, what you do with that information is up to you, right? And I think majority of us, we share that same philosophy, right? And it's manifested itself thus far, all right? So that's the wrap up for Johanna. Like I said, it's still early days, but we've made a lot of progress, right? And we're trending well. We've leased up, I think, about 6 or 7 renovated units to date. And we still have a long way to go, right? So I will hand it over to our newest baby. We'll switch over to our newest baby on the block. On that deal, once again, just 2 of us, myself and Tunde, are the GPs on that deal. And like I said, Tunde has been investing with me on, since Esperanza. He's been one of my investors all the way through. So I'm very excited, I was able to get in on this. This, I said Mangum was a bit weird. Jacquelyn that he's going to be talking about was a stretch. Like, this is like Wild Wild West, right? And we went beyond our buy box for this. But it's just a fantastic, fantastic property. And I want to apologize because Jacquelyn, the same thing. The equity raise was small, just about 1.3. And between Tunde and I, we both raised almost half of that. So the amount we raised from investors was quite small, just about 700 grand. So we didn't really share it out, release the deal to everybody. So there were a lot of people that knew about it, but never got a chance to get in on that deal. So I'll stop talking and hand it over to Tunde.
Right. Well, my name is Tunde. I know some of you. Like he said, I've been one of the investors since Esperanza. I've worked, listened, learned from AFA for years. He's talked a lot about Jacquelyn, but the point I want to say about Jacquelyn is this. We started from the very first property, Monterrey, Esperanza. There was always that baseline, right? The baseline, the base value proposition. Do it properly. Operational excellence. Acquisition analysis. Do it right. Plan your exit. There is always a value proposition. And AFA has done a great job on the past, 5 properties. Now, what I've noticed and what I'm really proud of, and I'm happy for the team, is that over time, step by step, we met the baseline, but there's also continuous improvement. What I mean is the value proposition keeps getting better. We just talked about Mangum, right? Half of it was not filled out, and they were able to fill it out in 6 months. He's still learning, growing, getting better. Jacquelyn, it's getting better. So much so that we're having, in Jacquelyn it's a 40-unit property, yeah, and 1.3 million. We were oversubscribed. Like he said, not that many investors came in because a lot of people wanted to come in. We knew what we were doing. But the best part is we acquired it at a lower valuation. The value proposition keeps getting better. We know that we can execute. We had 0% occupancy, which is something 2-3 years ago he would never have done. 0% occupancy. But there is a confidence now that within a year, we can have it up 70-80% and fully stabilized. We have not really focused on refinancing, but on this deal, because of what we've done earlier this year, there is the confidence that we will refinance very shortly. So it's a new deal. We closed early December. There's not a lot to say about it, but what it does say is about the team. Team has confidence, and investors have confidence in the team, right? What else? We fully expect it's a property with 5 buildings, yeah? We expect to have 2 of them, 16 units, occupied in 3 months. And then by the end of the year, we expect to have that fully occupied. A lot of kudos goes to not just to AFA, but to, as you guys are aware, the operations team, the project manager, the property manager. A lot of kudos goes to that team. So yeah, kudos to AFA. And what I wanted to emphasize is this: it only gets better. This is number 6, number 7, number 8, number 9. It only gets better. We only get more experienced. We only get the operational excellence only increases, and we have that confidence. And I think that's it. That's all I got to say.
All right, so thanks, Tunde. So I know too much talking. So too much. So I'll just say one more, just something else. Then I want to grab someone. So before we wrap up, I want to grab someone to talk. But honestly, even though my co-GP have been saying if the reality is we are blessed and fortunate for the team we have. Right? I always tout I have the best investors because no one gives me a headache. I speak to a lot of other operators or whatever. I know what they're dealing with. But most importantly for me as well, I'm very blessed with the partners, the co-GPs that I have. Right? So even though, you all see me on the videos all the time, right? But the reality is, it's a team sport, right? And they're all plugged in on the backside, right? So even though, I might be the face, no, don't get it twisted. No, there's a lot of stuff that they're also carrying on the back end. So I really want to appreciate them as well, all right, for all the effort and work they've put in. So, but before we switch up for dinner, I wanted to just share something because as we keep growing, right, like I said, I'm a very big believer on our network, leveraging ourselves. Like last year, we did something different. So when I do see people doing amazing stuff within our community, right? It's always a good way to share and to bring it to light. Once again, to share with everybody. Like our chairman here, for example, him and his wife, they own a production company, right? So he's also one of our investors in Johanna, right? So they, would work together in my prior career. He's done a lot of production stuff for me on the marketing side. So once again, just leveraging ourselves. But then the other thing I wanted to bring, like Francis, that's Francis over there. So Francis and, they have an amazing group, right? And they sort of run a fund, right? And it all started with, they're all, like high school guys. They've kept, I know. Yeah, no, I'm getting this, yeah. So high school guys, right? They all went to high school together. So, and they all kept track of themselves and they have stayed close. But most importantly, not just staying close, they have found ways, kind of like what we're doing. They have also found ways, right, to successfully monetize that friendship and that relationship. That's key. And empower themselves, right? So Francis sort of runs it, or Ralph was, Ralph is Amara's brother-in-law. So Ralph was, a couple of years ago, he was the one that brought it to me, right, to tell me about it and everything. I'm like, oh, wow, that's amazing. And then he introduced me to Francis. And then because what they had originally done was basically microfinancing. That's what they had built out. And they've been successful on that in basically providing debt services to individuals, right? So when we connected and him and, their group, they started investing on all of our deals. So they invested in Mangum, Johanna, Jacquelyn. They missed out on it. They were too slow. But anyway, they do what I wanted him to just at least, I want to give him a couple of minutes, right, to just quickly, not just educate, but highlight what they do, right? And then of course I'll follow up and I'll send you all his info and a bunch of stuff for those that are more curious, right? So you can dig in. But once again, I think it's just good to highlight some of all the key stuff that we do that we can potentially leverage, right? And the fact that they are also part of our group, right? You know, giving them the ability to create customized products, let me put it that way, potentially, that are not affordable for anyone else, all right? So Francis, if you don't mind, could you just...
Yeah, sure.
A couple of minutes and then we'll wrap it up.
Hi, everyone. Thanks, Efe, for the introduction. This is my first time of attending one of these, and I must say it was a very incredible turnout. I'm looking forward to getting to know everybody in the networking session. So just like Efe said, I represent a group of people that we originally, just a little bit of backstory, originally we're all attended high school together, but we had kept in touch with each other. And over the years, we have pulled businesses and funds together. And as of today, we have been able to create a microfinance bank, as you may say, as you say that. So we are a consumer lending group in the US here, and we specialize in debt servicing, credit consolidations, short-term loans, personal loans, you name it. And we've done a lot of incredible deals with Efe. He has been very, what we have going here is very promising, and we were really very excited about it. And I wanted to partner with Efe to say to everyone that is in any of these properties that we've invested in, we're actually confident in Efe that we are willing to say to everyone on this group today that we will offer to all of you a very, our services, which is the personal loans, short-term loans, at very competitive rates, and also zero, you don't have to worry about things like credit score and all of those stuff, right? So long as you are affiliated with Deko Capitals, we are ask and you shall receive. That's what it is. Right. So thank you, and thank you so much for your the team. We know that it's not always that easy, right? We see you in your videos, but we know that a lot of work goes behind it. So thank you guys. That's all I have. If I will send a lot more information later. All right.
All right, everybody, so we are done.